Good morning, everyone. Today is Tuesday, January 28th, and today we will cover the trades for YieldMax funds, Tesley, Cony, NVDY, Misty, and AMZY. And what a day yesterday. Oh my God. A China app causing that much disruption. I mean, it's really a little ridiculous if you ask me. But anyway, let's get to the funds, and we'll see what happened. So TSLY, we'll start with that because obviously they're at the top. They had a trade yesterday. And for those of you new to my channel, just really quick, what you see here is a download of the intraday trades. It's just formatted a little differently so it's easier to look at. And again, if any of you have any other preference as far as what to focus on with this new view, please let me know. But I feel like this is, kind of the best arrangement because, buy to close is highlighted, puts are highlighted because they're not, every transaction. You see calls on it basically every trade, right? When it's a buy to close, it's important. When it's a put, it's important. And then the value in column I, whether it's a debit or credit, is also important. All right, that being said, let's see what Tesley did. So real quick, you see a buy call, right? Buy call, type buy, strategy call. And then sell put. Short sell just is sell. Short sale is sell. So sell put. So buy call, sell put, 550 contracts. And same strike, 400. So what does that mean? They added to their synthetic position. And then they sold a call, all right, for using those same contracts, 550 right here. And they chose a strike price of 417.50, 5% out of the money right over here. Okay? Simple as that. But again, we cover Tesley in a little more detail, so I will pull up the spreadsheet. So let's do that right now. All right, so Tesley, they have two synthetics. They have a 480. This one's getting kind of whooped at the moment. Tesla's at 397 as of the close yesterday, which is, kind of brutal. The synthetic, when they opened it, again, 480. 480. 17% away. And I know they have earnings this week, and I understand Powell's talking this week, I believe. So, those two things are big for Tesla. Could be big in a bad way, big in a good way. Who the hell knows? But again, we got 25 days till expiration. Are they going to go up 17% in 25 days? I mean, to be honest, not likely. Even if they do, we kind of don't want them to because our calls will get blown through in that short period of time because we sell calls, out of the money, 4 or 5% out of the money each week. So, but we'll see, man. The other synthetic, though, that's in play, this one's essentially at the money. Obviously, Tesla being at 397. This is a synthetic 400. So this is the one they added to because this is the one closest to the current price. So here you see the 550 contracts added to the synthetic position. The credit for the put was slightly larger than the call. So they actually did not have to pay anything. In fact, they made money. Almost $200,000 for adding to the synthetic position. So that's good, right? And then, that's it. Same thing, same expiration date, 25 days away. Again, the point of the synthetic position, buying a call, selling a put at the money, same expiration. The idea is just to mimic the movement of the underlying stock. They don't own the stock outright. They create a synthetic position, which essentially would mimic the movement up or down of that underlying. The reason they don't own the underlying is because they utilize that money and they invest it in treasuries. So they earn us even more interest, with that money. So I know a lot of people say, they're showing the underlying, but, you have to look at the advantages and disadvantages. But, people will always have an opinion one way or the other, but I'm just explaining what these funds do. All right, anyway, how did Tesla do yesterday? Tesla went down 2.32%. Okay, not that bad, right? I think it was worse in the morning, but again, down 2.32 after a bloody mess in the overall market. Tesley went down 1.8%, so a little less. Again, covered call strategy, so they typically won't go down as much as the underlying will. All right, so the new position that they added, I'll cover that one real quick. 550 contracts. You saw a brand new position. They chose an expiration date for this Friday, so that's good. So this position, it expires in 4 days. They sold a call for 417.50 strike price. That's 5.12% out of the money. And this goes across earnings, all right? Goes across earnings. What does that mean? That means the premium pays a lot more, right? And there's much more risk. And you could see, look at the annualized yield in selling 5% out of the money for 4 trading days, essentially, 210% annualized yield. Their IV is 62%. Obviously, that looks aggressive, but at the same time, yes, they did a credit call spread, which means they bought a call with the same amount of contracts, same expiration date, but higher strike price. Higher strike price being $452.50, which, it's about a 30-something dollar gap. But you see the annualized brings it down about 60%, which essentially pushes them at 150% annualized yield. Actually, this is also, we always talk about how do we annualize these. We have to do the 252 rule, 252 trading days. Is it 252 or 250? I never remember. And then that's the proper annualized. Annualization is... At least I remembered, right? There is hope. So let's see what it looks like now. I always like to make this blue, not like it matters, but it's kind of the thing. Okay, so about still over 100% annualized yield. Again, their 30-day IV is 62%, so this is kind of aggressive, to be honest. So they could have gone much further out of the money, but they didn't. So let's see what the other positions look like. We'll start at the top. Again, anything in gray was covered previously, and those positions are closed. So we'll cover what's open. All right, so they have about, 16,000 or so contracts, 440 strike price, currently 10.79% out of the money. All right, that's pretty good. Double digit out of the money. I'll take it. And then they got 7,198 contracts, 437.50 strike price, 10.16% out of the money. Okay, not bad. And then 7,300 contracts, 435 strike price, 9.53% out of the money. All right, I think those are okay. I don't think that gives them reason to go as tight as they did on this. Some may think, okay, earnings is going to be bad, so it's a smart play. But again, I don't know if that's necessarily a smart thing to say, because you don't know. One way or the other, we don't know what's going to happen. But, I mean, all in all, right now, we're kind of in a good spot. We could get our asses kicked at the same time by the end of the week. So we don't, we'll see what happens. And we'll also see what happens. Again, today is the day before they have earnings, I believe. And, we'll see how the market reacts to Tesla. Will the sell-off... Again, yesterday's sell-off was not really related to whatever their earnings is. It's related to a stupid China app, which, I don't even... Whatever, let the market go on sale. I don't really care. We'll buy. We'll sell puts, baby. So let it do its thing. I'm sure there's going to be some type of recovery today. But yeah, I don't know. Let's see what happens. All right, outstanding shares for yesterday increased by 700,000. So yeah, people buying in. They're not scared of earnings. 30-day IV is 62%. That's for Tesla. Outstanding shares of Tesley, 95.1 mil. Total net income, hair on my phone. Total net income, 22.7 mil. Total distribution, 24 cents. Total daily income, 4 cents a day. Total daily yield, 0.3%. And if you annualize that sucker, it's 111%. So again, very nice numbers. Let's keep it that way. Let's not get destroyed. I wanted to throw this in there. It's not for Tesla. It's really for Nvidia, or in some of these leverage funds, I saw like how much they were down. It was really, really insane. I mean, Tesla was down too, which means TSLY was down double, and it's just like, I couldn't believe it. The entire market was just like on crazy, crazy discount. And I hope you guys, had an opportunity to either sell puts or average down, because I'm not sure it's going to last again. But who knows? Who the hell knows? But yeah, that's why I put 30% off, because I looked at it as a sale, right? People love sales in the stores, but we love sales in the stock market. And yesterday, again, there's an app. Okay, an app. All right, I'll buy these other companies. We ain't scared. Anyway, Group A, they declare again in 22 days. All right, 22 days, February 19th. All right, let's get to the payment information, where we basically track how much they have made in realized gains or losses. Here's a realized loss on synthetic income, $2.2 million realized loss. However, the weeklies are producing a $22.7 million income. And if you share that same income with the amount of outstanding shares, which we saw increased, right? More people bought in. That's 21 cents per share in total, or just the weeklies shows 24 cents per share. Now, if you use the Rodinator, which we almost can, that, all things being equal, we're looking at $1.11. Again, let's wait 1 or 2 more days and we'll truly trust the Rodinator, because right now it's showing 111% yield with a 111 distribution. But if we use the IV, a little more realistic view, 63% IV would show a 63-cent payment. So yeah, safe to say it would probably land in between if we were to get paid anytime soon, in between these two numbers. All right, holding information. I mean, what can you say? It's quite the mess, right? They got a 400 and a 480. What's Tesla at? We didn't have. We need Tesla price on that spreadsheet. Actually, I should probably add it. Tesla's at 397, right? I should put up here. Yeah, on the top right here. Yeah, another day, right? All right, Tesla's getting. It's rough, man. The 480. You take my money when I'm in need. Yeah, she's traveling. Not a friend indeed. No. What am I talking about? I'm talking about this. $163 million. $163 million. See this negative number? This is pushing our total net asset value of the Tesley fund down. When it pushes it down, our NAV, our trading price, goes down. So that's not good. And this is the gold digger. This is the put. This is the lady that wants all of our money, and we can't give it out. When I say we can't give it out, we have a broke-ass dude down here. This is the 480 dude, right? He matched up with that lady. He's got $10 million to his name, and she wants $163 million. So why do I sing gold digger? That's a gold digger. Man, that's a gold digger, and she's probably going to get her money. We don't know. Again, we got earnings, which could be on our side, or it could go her way, and she could take everything we're worth. So right now, it's not looking good, and the synthetic put is destroying us. The 400 put, negative 35 mil on that. It's essentially at the money. The dude's got 32 mil. All right, that's a good match, right? Stay in your own league. That's a good match right there. Everything in between, what do we got going? Yeah, in the blue, both shades of blue, those are call credit spreads. And then we talked about the treasuries before. This is why they don't own the underlying. They buy treasury bills, treasury note, bond, this, that, the other thing. Why? Interest, right? We're still in a pretty high interest rate environment. So we can earn money on that money while we earn money on the other money, and the money. Make sense? Okay, good. All right, so the value of this fund is 1.2 bill. The NAV, remember the value of this 1.2 bill? That's, that number is getting pushed down by the gold digger. All right, hopefully that makes sense. Anyway, NAV 1307, trade price 1307, perfect. Synthetic, again, it's destroying us. It's worth the whole thing nets to be a negative 154 mil. So Yeah, we can't use that bailout. There is no bailout. All right, so up next, we got to talk about Misty, because if we talk about Tesley, we got to follow it up with Misty, and then we'll go from there. So I got to scroll down because Misty's a little further down. Why? Because they launched at a later date than obviously some of those others. All right, what did Misty do? Kind of same thing Tesley did. Buy, call, sell, put, sell, call, buy, call. So basically, people bought into the fund. So the fund manager utilized that money. They added to their synthetic position, right? And then what? And then they sold calls on it, right? That's what they do. Simple as that. Where does the new investor money go, though? Of course, it goes to cash, right? Cash. And then, obviously, they'll eventually move it from cash to treasuries. Make sense? Good. Let's move on to our spreadsheet. All right. So, Misty, they also have two synthetic positions, right? They have a 315 and a 390. MSTR is currently at 347, right? What was yesterday's date? Yesterday was the 27th. So if you have a 315 and a 390 and MSTR is at 347, where are you going to open the new synthetic position? Well, to be honest, at the time when they probably added to the synthetic, it was probably closer to the 315, even more than this. So that's why they added to this one. So they added 1,800 contracts to the 315 synthetic. And what did they get? They didn't get anything. They had to pay. They had to pay about $2 million, again, because MSTR is currently above the strike price of this. So the call, it ain't going to be that cheap. That call, they got to pay $7 million. And the put, they'll get $4.9 million. All right, deal. Anyway, again, they're going to add to the synthetic that's closer to the current stock price. Here's the other synthetic. It's a 390. They're 10% away. Not terrible. So, at least we probably won't be seeing gold digger here. So that's a good thing. And both of these synthetics, by the way, they expire in 25 days, just like all the others. It's a famous expiration date. It's going to be a very busy day, 2/21. All right. So what happened with MSTR? Well, MSTR was, pretty ugly during the day. It actually recovered during, towards the end of the day. So congratulations, MSTR. It ended up down 1.63%. Misty ended up being down 1.18%. So it's, okay. Nothing crazy. All right, let me get my proper zoomage here. Why am I have to zoom out so much? Okay. All right. So the 1,800 contracts that they added to the synthetic position, here they are. They sold weekly calls. Expiration date this Friday, 4 days away. Oh, God, I didn't add the 252. But they sold a call with a strike price of 350, 250. Look at the out of the money, 1.32% out of the money. I'm going to have to fix this just to see what the heck. Because we can't annualize that sucker at this number. Got to use the... Again, I only annualize it at 365 when they trade across weekends because it's only fair. When they trade within the same trading week, I have to annualize it at the 252 trading day number. What the heck? Is it windy? Well, maybe it's a squirrel. Anyway. So, again, look at this. They sold a call 352.50. 1,800 contracts. 1.32% out of the money. To be fair, this could have been a much more, because we said, right, MSTR was probably down further, when they made the trade. So to be fair, this is probably a little further out of the money. All right, so I'll keep that in mind. All right, I'll keep that in mind. Let's see what the annualized yield is. So 91% minus 18%, right? So it's like 73 or something. But yeah, it's not aggressive. So are we okay with this? That's the question. Are we okay? Well, let's scroll up above and let's discuss after. All right. So what else do we have open? We got a whole bunch of 415s, right? about 40,000 or so contracts of 415s. They are now 19.28% out of the money. Now, look at, that's a beautiful thing. Why is that a beautiful thing? Because if we buy Misty today, or yesterday, I should say, this upside, like there is no cappage for quite a ways. 19% out of the money. You know, we're going to capture a lot of upside if MSTR decides to go up and we own Misty. So I do love that. I love seeing that. You know, I love when they're way out of the money. And then they got this one, about 10,000 contracts or so at a 400 strike, 14.97% out of the money. So, okay. So even if like the fund goes up 14%, in reality, we should be able to capitalize on most of that upside. So that's a good thing. The other good thing is they didn't jump the gun and close out these positions early and, you know, get killed on the way back up, right? So say they closed these early, they took the win, and then they sold calls like, say, maybe 8% out of the money, and then obviously yesterday you saw the recovery as fast as it came. We could have been blown through already. So I do like that they held tight. So yeah, this one, in the end, I'm not gonna say it don't matter, but it's probably gonna get destroyed, to be honest. So they'll probably end up I don't know, man. It's how much did they make on it? Yeah, not much. I don't know. I'd rather personally they just didn't even open a damn position, but whatever. All right, so look at the increase in outstanding shares. 1 million, 1.47% increase in outstanding shares. That's crazy. All right, so anyway, let's go to the recap. Let's get moving here. 30-day IV, 96%. Outstanding shares, 70.5 million. Total net income for the weeklies, it's a loss of 39.9 million, so I won't go any further because, again, if they're losing money, I'm not going to tell you what the yields are in the loss. We talked about them holding strong. I do like that move because, again, I feel like yesterday was an overreaction. So the problem, you know, the problem with them closing out their positions early is they have to open new ones right away, or at least so we think they have to open new ones. And the problem with them opening new ones is they're opening new ones based on that current price that just declined, say 10%. So if they go 5% of the money on a 10% drop and it recovers the 10% the next day or next 2 days, then we lose the money anyway. So in the end, what the hell is the point? And again, when you sell calls and it goes down and you can essentially close, you know, your position early, why wouldn't you? But that's in the outside world for us, right? It's a no-brainer. But we're not going to open a brand new position. We're not going to sell calls when the thing is at a freaking low when it just sold off. And that's what YieldMax does. When they close out their positions with a successful win, they open new positions right away, selling calls out of the money based on that current price. And that's the problem. That's the problem. But if they don't, are they not allowed, like, can they not do that? You know, is it against the prospectus? Or is it essentially them timing the market, which they don't want to do? I don't know. What do you guys think? I know I'm rambling, but again, I have to get that point out because you'll see what happened on Nvidia in a second. Group D, they declared 15 days on February 12th. So yeah, let's go to some payment info here. We got synthetic income. Again, this is the realized income, 233 mil. We lost 39 mil. We talked about that. So the total net income, when you net the two together, we have 193 million in total net income. That can produce 275 per share. Again, if we share with all these, you know, all these Misty holders, all of our friends, 70.5 million outstanding shares. And yeah, it would come to, like we said, 275 per share. So the Rodomator is useless because weeklies aren't performing. They're in the negative. So if we look at the IV of MSTR, it's 96%. IV estimate for Misty based on that is 204. Okay. Total distribution last time, 227. So are we going to get paid more than the last distribution? That's really what we should strive for, to beat the last distribution. And I In my opinion, I think we have a good chance. I don't know. I think that we'll recover, pretty good from. It's been down, and the other synthetic is just not good right now. But we'll see. It's going to be close. But unfortunately, you could see the trend, right? We got paid 442, 308, and then 227. So is this next month going to be $1 something? I sure as hell hope not. But if I was to answer the question, I would still think we're going to get $2 range. But anything can happen. All right. So here's their holdings. Like we said, we got 315 and a 390. Borderline, not quite gold digger, but it could be a gold digger. As of right now, you kind of see the call credit spreads in between, hanging out, chilling, yeah. And then the value of the fund is $1.9 billion. Again, it got kicked out of the $2 billion club just as fast as it got in because, it's not worthy. It's not quite worthy yet. It's not. They said basically they're not ready. They're not ready for that. So hopefully they get their act together and they get back in the $2 billion club. The NAV is $27.56. The trade price $27.61. Again, synthetic bailout net $42 mil. Okay. Let's move on. So that was Misty. All right, back to the intraday trades. Let's look at Nvidia, or Nvidia, I should say. So for those of you that weren't paying attention to the market yesterday, Nvidia got clobbered, like literally destroyed. Because apparently that they were the most impacted by this, wonderful AI app, which apparently is competition to them. However, so if a stock gets clobbered, what do they do? We just spoke about this, right? We just spoke. They sell calls on a weekly basis. So if the underlying goes down, way down, they can close out those positions early. And they did. Look at this. They paid 9 cents per share to close out the 152.50 strike, which is right here. They paid 11 cents to close out the 152.50 there, right? Any others? 10 cents to close out this 152.50. 9 cents to close out this, everything's a freaking 152.50 apparently, but yeah, that's how cheap it was to close out the positions. And that's awesome. It is. It's great. However, when they close out the positions for a win, what do they have to do? They have to open the new ones at that current price. They pretty much roll them, right? They're doing like a buy to close and then a sell to open at the same freaking time. So as great as that is, here we are with our new strike. We go from 152.50 and now we're doing a roll. We're rolling our position to a lower strike price of 130. That puts us 9% out of the money. We were 28% out of the money. Now we're 9% out of the money. Okay? Is that safe after this massive sell-off? That is the question. Same thing here. They closed the 152.50. What did they open? Right? We have to go. Where's the short sell? Right here. 131. 10% out of the money. Okay? Is that... We don't know, man. I don't know. Well, let's go to the file. But you get the gist, right? They closed out. They won. Yay! But they opened a new. And it's like, okay, be careful. All right. So we said Nvidia got clobbered. Let's see how bad it really was. Oof, man. Nvidia went down 20.44%. I mean, is that their biggest down day? I mean, holy crap. That is utterly ridiculous. That is completely ridiculous. I mean, hey, whatever. NVDY went down with it. Almost the whole freaking way, unfortunately, 20.22%. Why? If you're wondering why, I can answer that. I don't know if any of you care. But you saw how cheap it was to close out those positions. So the more Nvidia dropped from that point, it didn't really matter, right? It was so damn cheap for those calls to close them. So if it dropped even further and further and further, like we're not saving that much money, which is not helping our, downside protection. If we were closer to the money, if we were at the money on our strikes, then, this could be like 18% down or 17% down, but you saw, we were way out. So it was like essentially pennies to close our position. Now, let's first talk about their synthetic. NVIDIA's at 118. Their synthetics are what? 127, 135, 138, 148. I mean, you take my money when I'm in need. Yeah. This is bad. This is bad. Oh my God. However, the good news is today could be recovery day. Let's get back there. But I mean, we're under all of them. We got 4 ladies. I mean, we're the Mac Daddy over here. We got 4 smoking hot ladies, but unfortunately, we can't afford any of them. Why? Because we're 4 broke ass losers that don't have a pot to piss in, right? It's time for these dudes to get a job or stay in their own league, because this is an embarrassment, right? We are getting our asses handed to us. So we need better results. We'll come back tomorrow, right? And I hope to not sing Gold Digger tomorrow, but come on, man. All right, that being said, let's focus on the important stuff. Enough of the singing. This is serious business, all right? No more singing. We don't like it. I'm gonna run away. All right. You ready? Here we go. Here's all the new trades. Oh, real quick, expiration date. We got to check it. Let's go under QSIP. QSIP says 131. Okay. So they kept them in the same week. Okay, here we go. Here we go. 3,600 contracts, 124 strike price, 4.57% out of the money. Yeah, that one's a goner. You could say goodbye to that one. 28,000 contracts, 127 strike price, 7.1% out of the money. Not sure about that one, but probably going to lose that one. 29,590 contracts, 129 strike price, 8.79% out of the money. That one, I don't know. Could be close. 25,000 contracts, 130 strike price, 9.63% out of the money. Okay. 26,250 contracts, 131 strike price, 10.47% out of the money. Okay. All right. So these are the new positions. All right. These are the new positions. 4 to 10% out of the money. Keep that in mind when you understand the stock dropped by 20% in one freaking day, right? Was it an overreaction? Well, we're sure as hell about to find out today, right? When we go to pre-market, what's going to happen? If Nvidia's up 5%, well, you might as well kiss the 3,600 contracts goodbye and say that's a loss. So what the hell was the point of rolling, right? Why roll down to 124, right? Why? Why do that? Like, do you want to lose money? Or what are we doing here, right? So again, closing out early makes sense, but if you have to open new positions right away, it doesn't make sense. It doesn't. Stay far out of the money. If everything was 10% out of the money, I would not say crap. I'm like, okay, good. Because I feel like at a minimum, they'll recover 10% back, right? What do you think? I mean, I don't know. Maybe it'll go down again. Maybe it'll go down more today. Who the hell knows, man? Anyway, let's move on from that crap. Yes, they have call credit spreads, but probably won't do I don't know. Probably won't do anything. Anyway, the total net assets 1.3 bill. The NAV, oh my God, Nvidia is under $20. Do you believe this? How many times has it been under $20? Not too often. All right, but the NAV is 1911, trade price 1919. So this is bargain basement discount here. Synthetic bailout money 189 negative million, right? Is that how you talk? Is that how you say it? No, but for real, negative 189 mil. But anyway, here's the recap. 30-day IV of Nvidia, 68.9%. That's pretty good. Obviously, it's good in a bad way because of the sell-off. IV estimate based on that, $2. Group B declares in 1 day. So tomorrow, NVIDIA is going to declare, and we'll find out if it's crap. Well, I don't know, man. It's not looking good. They have to look at their future synthetic position and realize, oh, we may lose a lot of money. We may give up money to the gold diggers. So, but yeah, tomorrow morning they will declare. Stay tuned for that. All right, so that's NVIDIA. AMZY did not have a trade. Okay, AMZY did not have a trade. So let me go through AMZY fird. Well, actually, let me double check because you never know, man. You never know. I don't trust my own self. So AMZY would typically be at the top here. They got Netflix, then they're right to Cony. Yeah, so AMZY, no trade. Cony did have a trade, so we'll cover that in a second. All right, so how did Amazon do yesterday? Amazon, again, big company. Do they give a damn about some random app? Let's see. Amazon went up 2.24%. AMZY went up 0.15%. So the answer is no. Didn't affect them. So that's why we love Amazon. All that noise in the background, all these other stocks. Sell. Not Amazon. All right. So Amazon's currently at 235.55. Their synthetic is 210. So they balling with that one. Now, how's their call doing? Let's see. Here we go. 12,630 contracts, 240 strike price, 1.89% out of the money. Okay. I mean, yeah, it's tight, but Amazon don't move much. Hopefully we win. So far, so good. Total net asset value of the AMZY fund is 292 mil. The NAV is 1951, and the trade price is 1948. Synthetic bailout. Let's see how much it's worth. All netted together, 32.9 mil. Man, look at that. 220 per share. That's some sweet ass money right there. So we'll see how, when they close that position, how much we'll actually make. But right now, it's looking good. All right, 30-day IV of Amazon is 37%. Estimate based on that is 57 cents. Group D declares in 15 days. Okay. Now we're on to the troublemaker, Cony. Cony had trades. I don't know what they did. I didn't really look, to be honest. But let's see. All right, so they did some buy to closes as well. So they closed out, let's see. They closed at a strike of 325. They rolled it down to 310. They closed out at 330, rolled it to 310, and they closed out at 330 and rolled it to 310. The 310 is 11% out of the money. All right. So they essentially rolled their higher percent, their strike, which was 16 to 18% out of the money, and they rolled the strike down to 11% out of the money. Now, that to me looks a little better, right? Because when you look at what NVIDIA did, right, where did they go from and to, right? If you look at the top one here, they went from 28% out of the money to 9% out of the money, right? So, and then, obviously some of these others, let's see, 28 buy to close, 28 to, where's the new short sale? Oh, to 7. So 28% to 7%. See, that's a bigger drop, right? So again, Cony, from what I can tell, them moving the strike price down, not as ugly, not quite as ugly as NVIDIA. All right, so anyway, how much did Coin go down? It went down 7.2%. Cony went down 6.35%. So yeah, not terrible, I guess. Anyway, Coin's at 278. That's under every freaking synthetic position. Come on. You take my money. All right, that's all I got. Yeah, man. Gold digger galore. Look at this one. Look at this one. Oh, my God. $107 million to close the 320 synthetic, right? We're selling puts. We're saying, all right, I'll buy the shares at 320 by 221. Okay? I'll buy them at 320 by 221. Coin's at 278. So obviously, yeah, we're getting ripped off on that trade. How much does the dude make? The dude makes 21 mil. The chick wants 107 mil. Yeah. Need I say more? All right. And we're done with the gold digger talk. I know you guys are sick of it and you're about to turn off the channel. You're like, I had enough. I'm leaving this guy. If he sings one more time, I'm not doing it. I'm not doing it. All right. How we doing? We have, let's see, 131 expiration. So everything is still for this week. 14,000 contracts, 310 strike price, 11.43% out of the money. 15,515 contracts, 317.50 strike price, 14% out of the money. And then 9,890 contracts, 322.50 strike price, 15.92% out of the money. Out of the money. So are we safe? I don't know, man. I don't know. But at least everything is double digit out of the money. The value of this fund, almost under $1 billion. Almost kicked out of the $1 billion club. Wow. Anyway, the NAV is 1308, trade price 1308. Synthetic bailout, yeah, disaster. Negative 100 mil. And the 30-day IV of coin is 79%. IV estimate based on that, 80 cents. They're part of Group C, and they declare next week, 8 days away, 2.5. Okay? 2.5. Real quick, I'm just going to go back to this and see if anything jumps out at us. What Murney. Oh, AIYY, they probably got their ass kicked too. Good God. By the close, they closed out, what, a 37? Where's the new short sell? 30, move 37 to 34. So 18% to 9% out of the money. Okay. Yeah, and then what we close here? By the close, 36.50 to the new 33. So 17% here to 5% out of the money. That's probably going to be a loss. Oh boy, YBit by the close. Yeah, they closed out their positions. Doesn't look like maybe all of them, but whatever. Dips, screw you. TSLY, Platey. Oh yeah, Platey probably got a little whoop too. It's all good, man. It's all good. They got some. Look at all the ulti trades. You can see the busyness. Soxy, LFGY. I understand LFGY and GPTY got their asses handed to them as well yesterday. So, hey, it is what it is, man. What can you do? All right. That being said, that's the trade information. Now we're going to go to pre-market and see what we see. All right. Let's see if it works. Here we are. Let me refresh marketwatch.com. All right. This is as of 5:36 a.m. I'm making pretty good time, and good thing because I got to commute my ass to the office. 1 hour freaking commute. So I may or may not do a commute video. We'll see. Riding with Rod. That's the series, in case you're wondering if you're new to the channel. Some people actually would like to listen to that, believe it or not. So, again, we'll see. We'll go from there. No promises. Tesla's up 0.76%. They're at $400.18. Tesley is up 0.84%, $13.18. Here we go. Nvidia. Oh my God. Look at that. Remember that one position? What was it? 4% out of the money. Here we go. The first, not even 6 a.m. They're up 5.15%. $124.58. So that one position, right, we said was a loser. It probably more than likely is a loser. But we'll see. Obviously, let things develop. I know it's pre-market. NVIDIA's up, right back up above 20. It's up 4.79%, $20.11. Coin. Slow recovery here. It's up 1.07%, $280.97. Cony's up 0.99%, $13.21. Slow recovery is good for them, right? They're 10% of the money. All right, oh my God, MicroStrategy. What's going on? They're actually still down. They're down 0.31%. They're at 346.84. Misty is flat or not updating, 27.61. TSLY, they're up 1.47%, 26.19. TNA, baby, let's go. They're up 0.09%, 44.54. AMZY is up 1.94%, 9.48. AMZY is not updated, 19.48. Bitcoin is, wow, Bitcoin's up 1.54%, 102,972. BitX is up 3.31%, 61.11. Saxol. Wow, here we go. Saxol recovery here. It's up 4.71%, 26.24. Super Microcomputer, they're up 2.86%, 29.84. SMCY is up 1.39%, 22.57. Oh my God, they're at $20 range. This fund, man. I really want to buy it, but I'm not going to do it. All right, Palantir is up 1.82%, 76.81. Platy is up 1.41%, 66.39. That's a YieldMax fund. $66 YieldMax fund. TSM is up 3.21%. TSMY is up 3.8%, 17.77. And then last but not least is Mara. They are up 0.96% at 18.46. Okay, all right. So that's the update, guys. That is pretty much it. By the way, I didn't even mention it. I did an interview with Mike Venuto last night, live Q&A with the community. A lot of you were there, by the way. Thank you for joining. Thank you for being involved with the discussion. Obviously, it wouldn't be what it is without you guys, so thank you very much. But if you missed the interview, I will pin that interview to the top of the comments. And it was, again, something a little different, right? It's not just talking to Jay. We're talking to Mike Venuto, who he's essentially the ETF guy, right? Title launches all these ETFs. So he talked about different ETFs, right? Change it up. Instead of just YieldMax. It's good to have, conversations about different topics. So if that interests you, go check it out. It's about an hour interview. My 9-year-old, it was dark out, and my 9-year-old's knocking on the window. He's outside. I'm like, oh my God, what is he doing? But obviously not behaving. He had one job. Don't bug me for this hour, and he just couldn't make it. But whatever, we made it through. That's life. It turns out, actually, after, he's like, he finally asked me for my channel, and I told him, and he watched all my shorts. He actually liked it. So I told him I'm going to get him involved now with the shorts. I'll have to think of something, but he's been asking to make a YouTube himself, but maybe I'll let him make some shorts with me on my YouTube. I'll have to think of something funny, investing related, and we'll go from there. All right, guys. On that note, as always, this is not financial advice. I am not a financial advisor. This video is for fun and entertainment. Hopefully you had fun. Hopefully you're entertained. I mean, today's probably wasn't that fun and entertaining because, we got we got our butts kicked. And it made, it may be okay in the end, but, we'll see. We'll see how things go. But, again, if you weren't entertained, that's the beauty of doing a daily video. I can always make it up tomorrow. I could screw this video up so bad it doesn't even matter, right? Because I can fix it tomorrow. That's the beauty of daily videos. I'll fix it tomorrow. But anyway, for real though, if you actually enjoy this content, please hit the like button. If you have any questions or concerns, leave them down in the comments below. All right. Outside of that, guess what? We made it to the end of the video. So if you made it this far in the video and you want to prove it, you gotta say the keyword. Now, again, I never go into these with a freaking keyword, which I probably should. But the only thing that's coming to mind to me is the new strikes for Nvidia. And, what's Nvidia at? Nvidia's at 124, 5%, right? When we go back to our Nvidia file, where is it? Right? They have a strike at 124. 124. And let's go back to the intraday trades. Did they open the 124 yesterday? Let's make sure they did. They did, all right? So the 3,600 contracts, 124. But yeah, this was part of the new position. It looks like they added contracts and they did a 124, all right? So they opened a 124 yesterday, 3,600 contracts. So this 124, this is a problem, right? This is a problem, and this is what I'm going to focus on because that's what I do. So that being said, the keyword today is 124. All right, simple as that. 124. These were, again, new contracts, new money coming into the fund. Right away, they sold a call at 124 on a 20% down day. They sold a call 4.57% out of the money on a 20% down day. All right, 124. Keep that in mind. Now let's go to pre-market. What is it at? 124.38. So you can see the frustration here on some of these trades. And I don't know. That being said, if you made it this far in the video and you want to prove it, the keyword today is 124. And why? Because I want to focus on that stupid strike price of 124. Because we're about to get blown through that and then some. I could be wrong, and I hope I am wrong. But that's where the focus is. That's the only thing that came to mind when I thought about keyword. So like I said, if you made it this far in the video and you want to prove it, you have to type 124 in the comments down below. And that way we know you made it this far in the video. We know you made it to the end. We know you are a trooper, all right? And I just want to say thank you to all of you for making it this far in the video. Thank you for watching this content, and thank you for being a part of the community. It is greatly appreciated, as you guys know. I think I say it, maybe too often, but it's fun. I'm having fun, but for real, 124, bro. 124? Come on, man. All right, I'm out of here. Let me post this so I get my ass to work. And then, we'll talk soon. All right, have a great day, everyone. Later.